So it is just after 6:45 in the morning, and I managed to beat the alarm this morning, which is good. I keep waking my wife up with it, and she's not happy getting up as early as me. So I managed to beat the alarm, which is good news. Just going to make a coffee, and then going to go upstairs and open the charts, do the market analysis. Spent a couple of hours yesterday looking at the weekly, daily activity, looking at weekly relative strength, daily relative strength. They pretty much told a consistent story that we had shorting opportunities in New Zealand dollar, Japanese yen. So New Zealand dollar weak, Japanese yen relatively strong last week and towards the end of the week. I've got two shorts on in New Zealand dollar New Zealand dollar, US dollar, and New Zealand dollar CAD, and also another short technically a long in Australian dollar, New Zealand dollar. So quite keen to see how New Zealand dollar has opened. The only other trade that I had a third of the position still on was Euro Japanese yen. I might be out of that first thing. That was performing quite weakly. There is European news out first thing this morning, PMI news, which could give that a little bit of a lift, but I may be out anyway, so don't trade the news, just protect myself from it. So this is the last week in September. It is it's been a difficult 2 or 3 months to begin with. Not hit the targets I'd expected to hit. I guess I kind of knew that coming into the challenge, but you've got to set yourself big targets. But push on and just continue. That's it, really. Execute the strategy. I'm confident in my strategy. My strategy will perform well once I catch the long-term trend, the big move. Not really had the opportunity to do that. Lots of whipsaw action in most of the pairs, so just persevere and crack on. But in the meantime, I'll go make this coffee and let's see how New Zealand dollar opened. So some strength, some bids in New Zealand dollar, US dollar overnight. That's quite normal actually, given the fact that we broke through the 3-year low on Friday. Would expect a bit of a retracement. So had a quick look at that, and we'll now get into the other pairs. Got my screens open, my analysis sheets ready. So let's dig in. So it's about 25 to 7 early on Tuesday morning, and I am already up. No time for the market analysis this morning, unfortunately. I'm off to London. Those of you who watch this channel will know that I'm pretty interested in history, so the visit to London has a bit of a historic theme. I'll reveal more on that later. 6 trades on this morning. I've not brought the laptop with me. I'm going to leave those to play out, and I'll be back later on, but I'm sure I'll get the chance to do some filming in London, of what I'm there to see, what I'm there to do.
rain has stopped. It is now about 12:30. Just been for lunch, checked in on my trades, and not a lot's happening. Pretty much where they were this morning, so not a lot to worry about. I talked about history earlier on this morning, and I'm now off to Sotheby's to an auction for Charles Dickens's works. Been a big fan of Charles Dickens ever since I was a kid, in particular A Christmas Carol, and going to take the opportunity, had a look at this collection this morning, and going to take the opportunity now to go to my first ever auction and see what that's all about. A bit like the financial markets, I guess. We'll soon find out. Yeah, just going to see what happens. Should be pretty exciting. Had an opportunity to view this exhibition this morning, which was pretty special. A number of pieces I managed to hold from the 1850s, which you don't get to do every day of the week. Now, just trying to find my way, a little bit lost. I think I'm on Old Bond Street, but I'm not too sure. Hopefully I'll find this. I'll find it in a second. So I'm told it's not in that building. It is in fact in an annex down the road here somewhere. So I need to find that now. Say it is raining. Absolutely soaked. Good morning. It is Wednesday morning, and I've got to confess, I was up late today. I missed my alarm. I ignored my alarm, and I got up about 6:30, 7:15. So missed the 6 a.m. Close. I mean, there's no excuse for that. I've broken the discipline. I've got to be honest with myself about that. This is not good. My only excuse, and I don't really like excuses, is I was back from a very busy day in London yesterday. I'll talk about that in a moment. And I was really tired today. And I guess sometimes you need to have that extra rest. Plus, I knew I had a number of trades that I'd got out of. I was pretty much at my maximum risk exposure. There was probably not a lot to do this morning. I certainly wasn't going to enter any new trades until I tidied things up, which I've now done. So that's where we're at. You can probably see from the footage yesterday, in London, it was incredibly wet. And unfortunately, I was filming stuff, as I always do, on my iPhone 8, and lost a number of bits of footage, basically because the audio just went. The water got into the phone. I had to leave the phone to dry. I was still recording content, but unfortunately there's no audio attached. For some of the stuff where I'm talking, well, you need audio. So yeah, pretty wet day. Got soaked as soon as I arrived. When I was in buildings, it tended to brighten up. When I came out to the street again, as you'll see from the last bit of footage yesterday, it was as a taxi driver described it to me. I don't normally get taxis in London, but I normally walk everywhere. But as the taxi driver described to me, it was biblical, and I think he probably summed it up quite well. So that was that. I went to the auction. Very interesting indeed. My first ever auction. This was at Sotheby's. This was an auction of a collection of books of Charles Dickens and various other memorabilia that had been collected by a gentleman for 45 years. This guy's in his 80s now, was selling his collection. No idea what to expect at an auction. Quite curious to go. It was a little bit like, I guess, what it would have been like in the pits back in the day, open outcry, but a lot more civilized. There was basically three ways that these offers on various lots came in. It was by the phone, online, and also in the room. And I can tell you, I was pretty terrified to even move while certain bids were being put in. Probably the highest sale of the day was a copy. I think it was it Great Expectations or A Tale of Two Cities? It was one of the two. This was I think pitched at between £40,000 and £60,000. Went for £140,000 unbelievable what some people will pay for certain things. You're probably wondering, did I bid on anything? Yes, I did. Bid on 2 items. I won 1 item, which was a first edition of The Haunted Man, which is Charles Dickens's last Christmas book. I haven't got it yet. I'm going to collect it in 2 or 3 weeks' time. I needed to get away and get the train back yesterday. Yeah, big Dickens fan. My dad got me into that when I was a kid, into Charles Dickens's stories, and it was quite fitting that it was my dad's 82nd birthday yesterday. So quite a fitting thing, I thought, to be successful on one bid. Lost on another bid on an item, but that's okay. And the lessons that I kind of gained from this auction is very similar to trading. You've got to have a plan, and you can't let emotion take over. So on my successful bid, I had a capped top price that I wasn't going to go over, and we got to that price, and I won the lot. If we'd have gone over, I wouldn't have gone further. On the other lot that I bid on, it exceeded my maximum price, so I just stopped. But you can see how very easily in that kind of environment, you've got the auctioneer kind of looking at you to say, are you going to go again? Are you going to bid again? Very, very easy to get caught up in the emotion and get caught up in the frenzy. So yeah, an important lesson, and the trading discipline, I think, really helped yesterday. It is 8:45. I'm still in the dressing gown. I was up a bit later, as I've said. Not done today's blog. Done the market analysis. Missed doing the daily relative strength yesterday, so the comparisons have not been recorded. So a bit messy. Quite a lot's happened in terms of the trades. Probably too much to talk about in any of the blogs. I have had to exit a number of my positions using what I call a close stop. That's me cutting my losses, and I think probably best I'll jump in the shower, come back and record a quick video, just kind of summarizing all the trades that I'm still in, the trades that I'm out of and why, and what potentially could happen over the next couple of days. Very close to the back end of September. I am down. This is a period of drawdown. It is hard going through a period of drawdown. You start to question everything that you're doing. You start to question the validity of your system. You start to think about, well, should I try something else? And these are all the things that are traps, or all the things you shouldn't actually be thinking about. This system that I've developed has won, and has won consistently in the past. I'm in a period of drawdown. That's fine. I've just got to keep executing, managing my risk, and stay in the game. And what I'm always looking to do is to catch those high reward to risk opportunities. What seems to be happening at the moment, I'll put a position on, it'll go in my favor, it'll come back, it'll stagnate, I'll need to get out, or I'm stopped out, and then it'll either reverse very strongly against my the direction that I predicted, or move obviously in the direction that I had predicted. But hey ho, I'm out of the trade. So it's very frustrating, kind of whipsaw action, people reacting on news all of the time. Some trends, but very slow moving. So it is a frustrating time, but hey ho, that's trading. It's all about staying in the game long enough to be successful.
So first up, my short in euro US dollar. I entered here. We had a bounce, and basically this new stop pressure rule, this turquoise line here, basically the rule says that if I don't get a close below this low on the entry candle within 3 candles, and we've crossed and closed above this, I get out. If we haven't closed above this, then I give it 3 extra candles. Now yesterday I was in London, so technically I should have got out on this candle here at this level, 1.099. Instead I got out slightly later when I got back, so about 8:30 last night, exited the whole of the position. This trade may progress, it may continue to move down, but the important point is that I have got out of a trade that wasn't progressing in my direction of travel, and what I'm trying to do all the time is to cut my losses short and hold my winners for as long as possible. New Zealand dollar, US dollar. Okay, interesting. Yeah, similar story. I entered here on a bearish Wyatt's candle. We closed below this candle, so that means that this stop pressure rule falls away. But what has happened, and this happened overnight, so I did this early on this morning, I've exited a third of my position because the 10 exponential moving average has crossed back above the 30 exponential moving average. Looks like this level is holding the 50 simple moving average on the 240 charts. We'll know on the 10 a.m. close. I can't get short again. I can't re-enter this trade on a full house strategy at the moment until these exponential moving averages are in line. So the 10 would need to be below the 30. Could very well close above here, and then we're into trend strategy domain where looking for a change in trend from downwards to upwards. Euro Japanese yen was a similar story. Exited on 3 emergency exits, 1, 2 and 3. This trade never really went anywhere. Looking for a long position, it basically came back down within the downtrend on the daily chart, never went anywhere, so I'm out. Didn't hit my initial stop. This trade of course could still reverse and go back up, but again looking to protect capital. And then finally trade I am in, so that was a trade I'm out of, Euro Swiss franc. Okay, so this is a full house strategy. We got the close below the 200 simple moving average on this strong Y bearish candle. We have now closed below this level, so this stop pressure exit rule falls away. Now looking to track back down here. If I jump out to the daily, you can see that the trend looks to be down here. Albeit we had some push above the daily 50 simple moving average, but are now below and look to be tracking down towards possibly this SIG level 1 level, and this turquoise line is the bottom of the weekly trend line. On Australian dollar CAD, my short here entered here. We had closed below the 200 simple moving average. This is a trend trade against the prevailing trend. We closed below the 50 simple moving average. Couldn't get short at this point because we had the 200 in the way. So I entered once we got below the 200. This was this was one candle that got us below. Didn't get in here. This candle got us in, and then I entered here, still below the 200. And that's fine, providing I get a better price than the entry signal price. So we've tracked sideways, but we are holding this level. I've held this level, goodness me, well, for the past 4 or 5 days. So there's every reason to presume we may continue to hold it, looking for a push down into this level. SIG level 1 here, can probably expect a bounce here. So got my target to take off 50% of the position inside that level. If I look here, yeah, this is the 5 and 3 year low, so I have to be slightly careful. But you can see that the simple moving averages on the daily chart are very much pointing down. Australian dollar, New Zealand dollar. Okay, this is a trade that I exited. Basically, I was in a full house strategy, looking to stay long with this pair. Got in here. We tracked sideways. What you'll notice here, made a high. Failed to make a high here. We then made a low, close below this low here. This corresponded with the exponential moving averages crossing over one another and below the 50 simple moving average, signal to get out. And since my exit position, we've started to track down towards my stop. So this could be a trend trade that I could get into. Going to be looking for this to close below the 200 simple moving average to do that. But yeah, once one trade's done, I look for the next opportunity, which could very well be in the opposite direction. And then New Zealand dollar CAD. Okay, so this was a winning trade on New Zealand dollar CAD, very similar in fact to New Zealand dollar US dollar. I sold here, came down, hit my initial target, came back up, stopped out at my entry position, which corresponded with the 50 simple moving average. And I guess a question for me and something for me to think about moving forward, once I hit my target, I move my stop to entry. But in fact, from a structural perspective in the marketplace, it would have been better to keep that stop slightly above the 50 simple moving average. Now the counter argument to that is, well, okay, get stopped out, doesn't matter, I can always get in. And there is another opportunity to get into this trade again if this candle holds below the 50 simple moving average, providing the 10 and the 30 exponential moving average begin to line up. At the moment, the 10 is, well, looks to be crossing, probably on this candle close, looks to be crossing the 30. Again, what I'm doing is just following my rules. This was a winning trade. This was a 1-to-1 reward to risk ratio. Took off half the position, closed back, stopped out. It happens. C'est la vie. That's trading. So that's where I am currently. There are a few things that I am watching. I think there are some interesting potential setups on Australian dollar, Japanese yen. If we get below this level on the 4-hour chart, I'll be a seller. You can see this here. We're below the 50 and below the 200 on the daily. Similar story on Australian dollar, Swiss franc. It looks like we're going to close below this level here. This is the old trend line on the daily. Let me show you this here. We crossed above this level. This was a change in trend to bullish as I see it. But as we are closing, we've closed now below the daily 50 simple moving average on this pair, and that corresponds, or is about to correspond, to a close below the 200 simple moving average on this pair. I think there is a good chance that at 10 a.m. I can get short on this position for a very decent reward to risk ratio down into this SIG level 1, as I like to call it, which is the 3-year low. If I jump out to a bigger time frame, of course this pair could fall a lot further, but yeah, it looks to be all bearish apart from this intermediate bullish mode, which could have been a fake out. So yeah, I'm just going to look and see if the signal shows up, take the signal potentially at the 10 a.m. close.
Okay, so that's a quick overview as to the trades that I've been stopped out of, taken myself out of, cut my losses, and the trades that I'm currently in. Yeah, just wanted to reflect. I guess the frustration I'm feeling at the moment, and maybe the anxiety I'm feeling at the moment in relation to trading, is the fact that, I set these targets. They were very aggressive targets. Any trader who knows what they're doing will tell you that a 10% return on opening capital each month is a very, very aggressive target. That's 120% return per year, which is, is a very, very good thing if you can do it. And I've not hit these targets, and I'm aiming for these targets, but I've not hit them. And I've started to feel this kind of pressure. I'm kind of just breaking even each month. This is the 3rd month, and I want to make money, and I want to make money right now. And this is the danger in trading, because as I've said before, and will probably say again, the market only pays you when the market is ready. And the market clearly isn't ready to pay me as yet. What I have to do is to just be disciplined, stick to the rules, stick to the plan, protect my capital at all times. The temptation here is to try and change the strategy. The thought has gone through my head, well, what if I become a day trader? What if I trade on the 5-minute or the 3-minute or the 1-minute chart? I can make money right now. Well, maybe not. I could lose a lot of money right now. Is the flip side, and that's the danger. On the smaller time frames, difficult to understand where the long-term trend is. It's very open to market noise, market volatility. Very, very difficult indeed. And expecting to get paid each and every day is a thing that people put out in the marketplace. The educators put out in the marketplace. The brokers put out in the marketplace. Hey, be a day trader, get paid every day, give up your job. But it doesn't work like that. To be successful, as I've experienced in the marketplace, you've got to be on the longer term time frames, and consider the longer term time frames, because that's where the big players are. You're not gonna find these guys in the big investment banks looking at 1-minute or 2-minute charts. You're just not. They're going to be on the 4-hour, the daily, the weekly, the monthly. They're going to be holding these positions for a long time. And the issue with your strategy, whatever your strategy is, if you're a day trader, is that your stop is very tight, and your stop is very easy to be hit. The big boys have only got to do a little thing to push price one way or another to stop you out, and then continue in the direction that your trade would have gone. So it's a pretty dangerous place. So I'm just reminding myself of that this morning, and going on camera and publicly declaring that I am not going to change the strategy. I am going to learn this strategy, get better at this strategy, fine-tune this strategy so that it becomes my strategy. I'm comfortable with the strategy. I understand it. I know that on a good day, If I catch a trend, I'm going to stay in that trend for a great length of time, and that's really what the game is all about. So just wanted to go on record and say that. Now, I was editing, well, not editing, I was reviewing week 12's video, which I'm going to post on YouTube, put it back to my video guy who's making a few tweaks. But I know when I put that out, I'm probably going to get some comments. I'll get some comments maybe on eToro, had a few last week. You know, this guy doesn't know what he's doing, this guy's losing, or whatever else. And that's fine. That's people's opinions. And it's very interesting when you know, if you can be bothered to look at these people's performance on the on something like eToro. Their performance is pretty drastic, and they probably don't have a strategy, and they probably just follow what other people are doing. They're copy traders. Now, nothing wrong with being a copy trader, but it's not my game. I want to know what I'm doing and have my own strategy in line with my own rules. The problem with being a copy trader, or, you know, to use a similar thing, asking people for their opinion in the market, is you don't know what their risk tolerance is, you don't know what their time frames they're looking at, you don't know what their strategy is. If they suddenly disappear on you or do something different and they don't happen to tell you, well, you're not in the game with them. You know, I was long, I think it was New Zealand dollar, US dollar last week. I changed my bias, well, it's not bias, I changed my market direction. I went short because the signal showed up to take me out of my long and get me short. And I was being asked a question, you know, about being long on the platform on eToro, and I said to the person that contacted me, I said, I'm actually short now, and that's the problem. If you follow and copy other traders, you've got to have it. Basically, what I'm trying to say is you've got to have your own system. You've got to have your own approach to the markets, and it doesn't really matter what that system is, because it's really about money management and it's about probability management. When you win, you know, stick with it. When you lose or it's not working, get out. I watch the news, follow the news on FOREX Factory. There's always loads of blogging on FOREX Factory, loads of people asking, what do you think about this? What do you think about that? I never follow that at all. And the most sensible comment that I saw in FOREX Factory the other day was a guy who jumped in there and said, hey, all of this talk about whether it's going to go up or down, it's not really relevant. What is relevant is money management, and that's what trading is all about. It's about risk management. It's about managing your money, not exposing yourself to too much risk, and then adding to winners when those winners show up. So, yeah, I've rambled on a little bit. Wanted to get that off my chest. I am now preparing for the 10 o'clock close. Got 5 minutes. There could be some opportunities setting up. I think there's an opportunity potentially presenting itself in Australian dollar, Swiss franc short, which is always a slightly difficult trade to take because it's against the carry trade. But if the signal shows up, that's what I'm going to do. So let's jump in now, and I'll have a look. And if the signal is there, I'll be sure to take it. Okay, so got into that Australian dollar Swiss franc short. Just recording this on the phone camera for speed. Basically closed below the 200 simple moving average on the 240 chart. If I jump out to the, where are we? Jump out to the daily. You can see that we're holding the 50 simple moving average on the daily. As a result, I think this is a good trade. It's at the top of the previous daily trend line, and about a 2-to-1 reward to risk ratio into the 3-year low. Good morning. It is Thursday morning, and yeah, a little bit late broadcasting today. I'm sat outside the jiu-jitsu school I go to on a regular basis. I haven't been here for about a week. I missed Monday. I didn't go yesterday. Lack of discipline, really. Not feeling great, actually. I'm going to the doctors later on today. Still can't get rid of this cough. Still feeling a bit run down. Feeling a bit of anxiety. I don't know whether that has anything to do with the trading, but the one thing I know for sure is that physical exercise is a great antidote to all of that stuff. So I'm going to be training hard this lunchtime and then getting back to the charts for the 2 o'clock close to see what's happened. Not a lot seems to be happening. The market's moving very, very slow. There's lots of news out this week. Maybe there's pent-up tension for the news, but I'm really looking for some of my trades to develop into some strong trends, which is how I'm going to make my money. But yeah, frustrating. It's looking like this month, well, very like this month, will be a down month, a period of drawdown. Not easy to take. I'd hope to be in a much better position than I am now, but hey ho, that's the trader's life, and that probably is playing a little bit into the anxiety. We're all human. We all like to be successful at what it is we do, and even though you can't always be successful every month, particularly as a trader, the fact that the first 3 months have not been great, been okay, is a bit frustrating. But I've got 4 trades on at the moment. Australian dollar CAD shorts is over 50% of the way to target. I put on a trade yesterday, Australian dollar Swiss franc. This was a trend trade shorts, closed below the 200 simple moving average. By the end of the day, put that on at 10 a.m. By 6 p.m. Price had crossed back above the 200 simple moving average, and I was forced to exit. So yeah, a bit frustrating, but never mind. Let's get some jiu-jitsu done. Let's feel better. So great session at jiu-jitsu today, and back at the ranch now, and just been to the doctors, got to have a chest x-ray. Nightmare, to wonder why I keep coughing all the time, feeling pretty run down. So perhaps it's not the trading, perhaps actually it's something else. But anyway, I'm going to have a quick look at the charts now, do a quick rundown as to what's happening, which is not a lot, and yeah, wrap up the videos for today. Wake up tomorrow and fresh start, fresh day. See what the opportunities look like.
So first up, New Zealand dollar, US dollar. The Kiwi entered here, we traded down, took me into a paper profit, which means I can ignore the turquoise line for exit purposes now. We are now flirting with a 50 simple moving average, closed above it on the 2 o'clock close, now trading below it. So I'm holding. In terms of the daily chart, you can see the pressure is down in the market, and if I refer to my IG sentiment indicator somewhere down here, you will see that the majority of traders, where is it? Yeah, here. Majority of traders, 78.69% of retail traders are net long. That's a good contrarian indicator that I should be short. Next, into the synthetics, my Euro Swiss franc trade, again entered here. We've got a paper profit in the trade, gone up. We're holding this 200 simple moving average, and if I go out to the daily chart, we are, where's the daily chart? Come on, yeah, we kind of closed above the daily trend line, closed above the daily 50 simple moving average, but having closed above here, we then traded back down, and it's been bearish territory, offer territory all the way since, apart from a bit of a bounce today, but doesn't look to be much in that. So I'm holding this trade and looking to achieve my first target. In fact, missed this one out here. Let's go back to Euro Japanese Yen. Similar story. Again, pretty much exactly the same pattern. Same story. If I go out to Japanese Yen daily chart, yeah, you can see again closed above the 50 simple moving average. Has closed below. There is a good possibility we'll get to my target, but patience is the order of the day. Nothing really seems to be moving that well at the moment. I think traders are cautious. There's a lot of reaction to news, so trades that normally would happen for me and hit target or not within the space of 2 or 3 days, it's taking more like 2 or 3 weeks now, which is pretty frustrating. Pretty frustrating as we come to the end of the month, but hey ho, that's the game. Into the commodity synthetics, and just wanted to show you this trade that I'm now out of. Basically, this was a trend trade. We got the cross of the 10 exponential moving average below the 50 simple moving average, which had flattened out. Couldn't get in here because of the reward to risk ratio, so I wait for a second opportunity. Be below the 200 simple moving average. Got that here, entered on a short position here. We tracked down a little bit, but on this XY candle, we closed back above the 200 simple moving average. And according to my rules, that means I exit. So I exited there for a very, very small loss. We've now traded above here and back up to this kind of level. If we close down below the 200 simple moving average again, that will be a valid signal and I can get short again. But the whole idea behind this trade was to get in. If things went badly, if things went the other way and I got that closed back, I was to get out. So it's one of the things I'm really getting to grips with. You know, if things don't progress for me right now in a trade, within a reasonable amount of time, I can get out. I can always get back in. But getting out has saved me, you know, this pushback to 50% really, pushback to 50% of my positions, or 1% of my opening capital. The only other trade that I have on currently is my Aussie dollar CAD. Yeah, this trade's performing quite well. Entered here. We tested the 200 simple moving average a couple of times, well, 2 or 3 times. We then broke this structure here. This was probably stops being run. Came back down here, possibly traders taking profit. Was this push up? And now we look to be pushing down again into this SIG level 1, SIG 1 level. And inside that, of course, I have my targets. So fairly confident in that trade, but as always, you never know. So just going to watch, be patient, and hold on to these 4 trades unless I get a signal to get out, or I get a signal to take my target and potentially add an extra position.
So it's Friday morning, another Friday has arrived, and 27th of September, so only a few days left in the month. I've just entered a long position in euro pound. This is a trend trade signal. Been stalking this trade for probably about the last 24 hours. There's reasons on the daily chart to get in. We're above the 200 simple moving average and starting to make noise to the bids. So got in, see where we go. As always, I can get out. I'm out and about this morning, so it's going to mean it's difficult to check in. I may actually miss the 10 a.m. close. I'm going to try and be back for that though. But end of the month, often see traders start to wind up positions to close their books. Can get some interesting moves last few days. But technically, as I've said in today's blog post, it's not over until the fat lady sings, to use an expression. You can read that blog post at stgforex.tv, day 64 and 65. Official date for the end of the month is next Tuesday, and there's still all to play for. Up at the house, new house this morning, within the space of about a couple of hours, it looks like euro pound has really took off. So I think there was some news out this morning. I'm going to check when I get back, but it looks like the news was not particularly good for the euro, but for some reason euro GBP has spiked. Could of course be weakness in the pound, but not quite sure. It just shows don't follow the news, follow the price action. But there we go. I'll check in later and try and work out what's gone on. But sometimes you never know, and you've got to trade the signals. That's it. So it's Sunday afternoon, and don't normally broadcast on a Sunday, but got pretty tied up on Friday. And to be honest, not much happened on Friday, so I just spent probably about an hour doing the weekend market analysis in preparation for the forthcoming week. A couple of days in September, and then we're into October. So I'll be busy recalculating my highs and lows for my SIG level 1s. I think Tuesday that will be. Tuesday, Wednesday. So it's going to be a busy week. I've got 5 trades currently on. As I say, not a lot happened on Friday, hence broadcasting today. I'm going to see how the market opens and then trade the system next week. and of course we'll be moving into a new month. Looking like it's a drawdown for this month. Won't know that until those five trades, I should say, have closed. A trade that's open in the month counts towards the month as I calculate things. So as long as those trades are still in play, then they will count towards this month, however they end up. So that's it. Going to get this content across to my editor, get the video broadcast, and look forward to another week in the Forex markets.
It's already dropping in it.
It's raining, boys. Say hello.
Hello.
Raining.
It's raining tacos.
Behind closed doors, I'm a fool for your love.